Good morning and welcome back to Almus Market Mornings. Yesterday in India, inflation picked up in December but is still comfortably within the RBI's 2 to 6% target band, keeping the door open for potential rate cut in the February policy meeting. Subsequently, today, attention turns to the US CPI data due later today, the first official inflation reading since the government shutdown. And of course, the global geopolitical uncertainties continue as President Trump's fresh warning of a 25% tariff on countries doing business with Iran has raised concerns about the disruptions to global trade, especially for big economies like India, China, and Turkey. Meanwhile, in Japan, the government bonds dropped as rising political risks reignited investors' concerns over their fiscal policy. Good morning, Jayaram, sir. There are so many global issues still standing with multiple countries involved, and Trump being the central piece for all. What do you expect from the markets today?
Morning, Ishan. Yeah, there are far too many macro themes that are running right now that the market is actually feeling a bit directionless. So I think it will take some time before we get a real direction move, particularly on the dollar. If you look at it, the dollar started off on a strong note for the new year and gave up the gains yesterday in the wake of the new move by the US government to pursue the legal proceeding against Powell. And Powell's own statement, which indirectly indicated pressure on the Fed on monetary policy, was taken very negatively by the market. One of the rating agencies actually said that is uh, something that can actually affect the US rating if the Fed's independence is threatened. Since then, of course, geopolitical tensions have increased, and some of the key officials in the US, the former Fed chairs, as well as even Treasury Secretary Bessent, have not really supported what Trump or the latest move against Powell as being not good for the markets. Or the economy. I think markets are again taking it as a sign that this may not be pursued to that extent. We are directionless in the market. Yes, there are too many things still going on. There are, as you said, the tariffs on countries dealing with Iran, including India, will be subject to 25% tax on their exports to US. And then, of course, there is also a threat from Trump about 100% tariff on countries who are trying to float the alternate BRICS currency. Again, that's another thing that the market is taking note of. Not that we are anywhere close to a BRICS currency, but then it's just something like initial threat that the US is given. And then in the midst of all this, the economic data is actually taking a backseat. In India, CPI coming at 1.33% versus 0.71% last month is not a surprise. Market was expecting slightly higher. Again, this rise is due to rise in vegetable prices as well as fading base effect. But if you look at the core inflation number that has been at 4.6 and 4.3% in December, slightly higher than the 4.2 to 4.3% in November. Just to inform you that the RBI does not inform or announce. Sorry, the government does not announce a core inflation number. This is actually an estimate by the market analysts that we are getting. So in any case, core inflation is slightly higher for the month. All this does leave some room for RBI to, cut rate once again in this cycle. However, it's very unlikely that they will do that in the next meeting. It may be, some time before that can happen. In the meantime, we will also get an indication of how the Fed policy is moving as well. Also, from the next month onwards, we'll have new base year for GDP as well as CPI calculation. We'll have to see how that also goes about. In the meantime, rupee did see some stagnation yesterday near about 90.20. as the dollar weakened overseas. At the same time, the challenges to the rupee have not gone away. Some relief was that the stock market, which had started on a very negative note, recovered smartly. And the FI number yesterday was flat. There was no real outflow. Although for the month, as we said, we are still down about 1.2 billion on that count. We also have an important buy-sell swap of RBI coming up today, for 10 billion for 3 years. So we'll just see how that impacts the market as well. Last time when it was happening for 5 billion, there was some bit of volatility in the swap as well as in the spot market. So that is something that the market is looking at. Otherwise, market looks to be, the bias of rupee weakness is not going away. Can be that it's halted for some time, but then eventually 90-50 is not very far off for testing. Then of course we have the RBI factor. Their intervention could play a role as well. As I said, the dollar majors did not see any major movement. They're still, waiting for more developments on the geopolitical front. More attention now is on Iran. And then, of course, on the economic side, we have the CPI data from US that will be announced today. And expectation is that CPI will be slightly higher at 3%, and that will be 0.3% on month and 2.7% on year, and this will be something establishing the fact that the inflation remains sticky. May possibly keep the Fed on hold even beyond a January meeting as well. Something that we'll wait and see. We'll also have more data on retail sales, industrial production, and a month end we'll also have the GDP number, which we'll look at very closely. We'll also have the corporate earnings that the market is looking at. Stock markets have held on now, while the valuation concerns do remain. We have the Q4 earnings that is on the way. That will probably keep the markets in some kind of a positive mode. In fact, today the benchmark Nikkei index in Japan has hit a new high and rising as much as 3%, more than 3%, in fact. And this is led by tech stocks rally, and the weaker yen is also supporting the market. Some expectation that the monetary policy hike also may be on hold for some time in Japan is something that the market is looking at. So overall, the risk sentiment is not threatened despite all the challenges that we are seeing in the geopolitics, uncertainty about the monetary policy, etc. So that's also giving a clue to the currency market to be steadier. So more data to consume in the coming days. Keep an eye on open for what develops on the geopolitics, and of course the rupee trend that is not changing, although there can be small short-term movements only. Thank you.
Thank you, Jairam. So, and just to summarize, the dollar started off on a stronger note in the start of the year, but gave up all its gains after the Fed issue yesterday with Jerome Powell. And Powell's statements yesterday showed that there's a lot of pressure on the Fed when it comes to the monetary policy, and different Fed members are in the support of Powell. And what Trump did is not good for the financial markets. And I mentioned in the start that Trump looks to put 25% tariffs on all the countries having any sort of trade relations with Iran effective immediately. And the countries are in a bit of a shock because they don't know what the actual consequences are with respect to this new regime. And in the midst of all this, the economic data takes a back seat with the Indian inflation increasing in December to 1.33% from 0.7%. But the markets expected a slightly higher reading than this. And as the dollar weakened overseas, USD INR remained stable throughout the day in our markets yesterday, even though we had an update on the trade deal yesterday where the US ambassador said that they would be having a call with India on Tuesday with respect to the trade deal. And this led to a sharp equity recovery after starting off on a negative note yesterday. And to keep an eye out for today, we have the US CPI number and also the retail sales. and the expectations from the CPI are that it will be slightly higher at 2.7% year on year, keeping the inflation sticky and the Fed on hold for the January meeting. That's it from us today. We'll catch up tomorrow for a fresh round of updates. Thank you.